I look at all the problems. Listen, the U.S. has a lot of problems, but I would much rather deal with the U.S. problems, considering I have the U.S. Benefits, than I would prefer to deal with China's problems, knowing I only had China's benefits, or Europe, or Africa, or Australia, or wherever it is. And so when I look at things on a relative basis, and I realize the whole world's in trouble, whose problems do I have to deal with, and whose potential upside can I benefit from as I'm allocating capital? Even though I think that there's problems in the U.S., I can't find another region or another country that I think has a better combination of the two.
All right, he's the CEO and portfolio manager at Santiago Capital, but he's best known as the creator of the Dollar Milkshake theory, but he really needs no introduction. So Brent Johnson, thank you so much for joining me today.
Thanks for having me back.
Yeah, no, you were my very first guest on my podcast, so we came a long way.
I didn't realize it.
Yeah, you were my very first guest. And a lot of your work is exactly what I try to convey to people on my podcast. So it's an honor to have you here for sure. Appreciate that.
Happy to be here.
Yeah, look, let's dive right in. I know your time is very valuable, but we have many directions we can take the conversation to. You're passionate about the whole dollar system, tariffs, maybe DXY, maybe lower than I would expect. And the whole statecraft, mercantilism, deglobalization, right? We have many directions we can go, but I would like to leave the floor open to you to see what is your current assessment, or what main scenarios actually catching your attention right now, so we go from there.
Yeah, well, so I've been saying since last October, November, especially after Trump got elected, I have said that my roadmap, or my analog for 2025, would be 2022. And the reason was, when we had 2022, we had a whole regime change. It wasn't a presidential regime change, but it was an interest rate regime change. And there was a lot of uncertainty involved in that. There was a lot of people that had never dealt with that before. And people didn't know how far Powell was going to go, what the terminal rate would be, what the impact on the economy would be, and that uncertainty caused a lot of downside. And so the market went down like 25% from January to the end of September, but there was several double-digit rallies along the way. And so I thought that was kind of similar to what we would have this year. And because, again, I think we have a regime change. Now, this one's a little bit more dramatic, and it's more political than it is, hardcore finance, but it definitely affects markets. And so we very much thought that it actually took a little longer to develop than we thought. We thought it would start happening in January. It really didn't start happening until March. But we thought we would get downside in the markets due to the Trump tariffs and Trump policies. And then it actually went a little lower than we thought. We didn't think it would sell off quite that dramatically, at least in the initial stage. We thought it might go that low kind of by September timeframe, but we didn't think it would go that far in April. But it did. And so then we thought we would get a bounce. And we thought we would get a bounce up into the end of May, and we did. But I didn't think it would go this far, and I didn't think it would go into the middle of June. But here we are. And so markets have really rebounded almost back to their highs, not quite, but almost back to their highs. The VIX is back down to 16. The fear and greed, everybody's greedy, nobody's fearful. But I think this is due to many people misreading Trump's intentions. Just like they misread the intentions when he got elected and they thought it was just going to be smooth sailing, I think they are simultaneously, or again, misreading his intention of how determined he is to implement his agenda. There's this famous acronym now called the TACO, right? Trump always chickens out. And it's funny, and I get a kick out of it. And listen, I understand why people think that, but again, I think they're misreading the situation, because what I think Trump, to be successful in what he wants to do, Trump needs to do something that is very difficult. And that is, he needs to contain China without having them collapse. So what I mean by that is, in my opinion, what Trump wants more than anything in the world is a front page article on the New York Times saying how he's presiding over this fantastic global economy. And the second thing is he wants his, portrait on Mount Rushmore saying he's the greatest American president. right? Well, you cannot get your face on Mount Rushmore if China surpasses the United States under your administration. So he has to, battle China from that perspective. But you also simultaneously are not going to get your face up there, and you're not going to get your face on the cover of the New York Times for being a great deal maker if China collapses and as a result there's a global crisis. I mean, that's not a good deal either, right? So his challenge is, how do I keep China contained, have it be good, quote unquote, for everybody without causing a crisis in the process? And that is not easy to do. And I think he's willing to have volatility and perhaps even a recession, but he doesn't want a global crisis that gets totally out of control. And that's the challenge, right? I think if the United States wanted to really harm China, they could do so. But that causes all kinds of problems that he probably cannot control, right? And so when he put all this pressure on China, and that's the other thing I should say, I think all of the tariff stuff, all of these policies, the geopolitical policies, the economic policies, the political policies, I think it's all geared towards this America first and keeping China in a box. When he's dealing with Canada, I think it's secretly dealing with China. When he's dealing with Mexico, I think it's secretly dealing with China. Same with the EU, same with South America. So I think it's all about kind of getting his ducks lined up, getting his allies lined up, finding out who his true friends are and who they're not, and really kind of getting ready for this big battle, right? And so I think when he put all this pressure on China, I think it did hurt China. Now, it clearly hurt the U.S., and I'm not going to sit here and say that the U.S. doesn't get hurt in this analogy. The analogy I've used several times, and I may be repeating myself, so I apologize, is like a boxing match. Nobody goes into a boxing match expecting not to get hit. You're going into a fight, you're going to get hit. But the goal is who can stand at the end, even though you've been hit. And so I think Trump knows that in this economic battle or in this tariff war that the U.S. will get hit. And that became very apparent, in April. But I think China got hit too, more than people are willing to admit. And I think if China had not gotten hit, then they wouldn't have agreed to meet in Switzerland and they wouldn't have agreed to meet in London. China has problems. The fact is if goods don't arrive in America, that means they're building up on the loading docks in China. And that means China's not getting that revenue. And it means those factories over there are shutting down. And then you have unemployment. So while I definitely admit that there are challenges in the U.S., China has challenges as well. And so I think the reason Trump took his foot off the gas, so to speak, was he wanted to apply the pressure. He wanted them to get to the table. And then he releases the pressure so that they can move on together without collapse. Because I think if he keeps that pressure on, we get back to that collapse scenario, which is not good for anybody. And so I think in many ways he laid down the law, so to speak, and then he dialed back. He said, we're going to have a 90-day pause. We're going to have a 60-day pause. I'm going to extend this. And the idea was, okay, I told you guys I was serious. You didn't believe me. You saw that I was. And now now that you know I'm serious, I'll give you some time. We'll have a grace period where we can negotiate this in good faith. But maybe I will be proven wrong, but I do not think that if we get into September, October, November, and the other sides, whether it's Europe or China or Japan or whoever it is, and they have not lived up to what Trump has asked them to do, I think he will put the pressure back on. So I think in many ways, this rally we've had since April, it's appropriate to a certain extent, but I think it just the same way it got too far down in April, I think it's come too far back up into June. And so I think that we're going to have another downturn. I don't know if we'll go all the way back down to the lows that we had in April. Hopefully we don't, but I think we're definitely in Q3, we're going to have some more volatility, and it'll probably be pretty similar to late Q1 and early Q2. So that's kind of my current roadmap. And, I always have to be open to the fact that I could be wrong. But that's kind of how I see things right now.
Got it. And how does that translate? I mean, I had the impression after tariffs and with this whole thing going on that the dollar would just get stronger right away, but it really didn't. And what kind of trend are we seeing? Because the yields have also gone up. I mean, not crazy like the 80s kind of up, but still up, and a concern. And I know that from the dollar milkshake theory, you would say both going up at the same time, right? So can you guide us through this process? Is this still playing out, or something else?
Well, so I think you have to kind of zoom out a little bit, and you have to understand the dynamics of how the capital flows begin with. So I'm not going to go through the whole dollar milkshake theory again, but I'll give you the highlights. Essentially what the thesis said was that, and I started talking about this in 2018 and 2019. I said in the years ahead, the dollar would get stronger versus other currencies. I said the gold would rise and that U.S. equities would rise. And the reason for that is I thought capital would flow into the United States. And that is largely what happened. That's why, the dollar got stronger, U.S. equities went up a lot, and gold went up a lot. And the reason is because people from around the world who had excess savings wanted to invest in the economy that had the greatest growth and the best stability. And so you saw that. So in a way, the United States, and we've seen this before, and so in a way, the United States has become the world's piggy bank. It's where the world, global investors, store their excess savings and investment portfolios. Now, when you get into a downturn, or when things you get into some kind of an emergency, what do you have to do? And your revenue falls. What do you have to do? You have to tap your savings, right? And so that's what I think happened in March and April. The rest of the world, they put all their excess savings into the United States. When the downturn started, it's important to remember, it wasn't just the S&P 500 and the NASDAQ that went down. Markets went down in Europe, markets went down in England, markets went down in China and Japan and Australia. It was a global thing. And if you go and you look at those economies, you'll see that those markets were going down. So what do those markets do? Well, they have to tap their savings, right? So they sell their US assets, they repatriate those funds back to their home countries. And when they do that, they sell the dollars and they buy their local currencies. So in the initial stages of a downturn or a crisis, the dollar falls and U.S. assets fall because that's the rest of the world raiding the piggy bank. Interestingly, that exact same thing happened in March of 2020, February and early March of 2020, and it happened in September of 2008. And it's the same dynamic, and it's because the rest of the world, when things start to slow down, they repatriate their piggy bank, right? Now, what then happened in 2008 and in 2020, as it got worse from there, after the initial sell-off in the dollar and in the initial sell-off in U.S. assets, as the crisis got worse, then the dollar turned around and went higher. And so I would imagine if we went back down to those levels initially, maybe you see the dollar fall a little bit. But if it goes into a crisis and not just a short-term panic, I would expect the dollar to get strong under that scenario. Because in September of 2008, the DXY fell 5% over a 2-week period. In March of 2020, the DXY fell 5% over a 2-week period. Back in April, the dollar fell 5% over a 2-week period. It's almost eerie how similar it was, right? And if you remember back in April, people were like, "This is it. Nobody's ever going to invest in the United States anymore. They've shot themselves in the foot." But now look where the capital has come over the last couple of months. Look what the U.S. markets have done. They've rebounded, and the reason is because despite all the U.S. problems, they still have a lot of potential. And but to your point on the dollar, I think people need to kind of put things in perspective. If we get into a global crisis, I would expect the dollar to go a lot higher. But in the initial stages of a sell-off, it doesn't surprise me at all that the dollar falls, because that is typically what happens.
So basically a defensive move for their markets, but also positive for liquidity, so to speak, right? If we think about the DXY going a little bit down, that means that the game just plays for a little longer?
Well, so here's the critical thing, and this is part of the reason why the capital gets repatriated in the first place. And this is a part of the framework of the dollar milkshake, which is kind of what led me to the whole framework to begin with, is that because the United States dollar is the global reserve currency, the US only has to operate in one currency. They operate in US dollars domestically, and they operate in dollars on the global stage. The rest of the world has to operate in two currencies. They operate in their local currency in their domestic markets, and they operate in dollars on the global stage. Where this becomes a problem is when you understand that the system, the monetary system we currently have, is a debt-based monetary system, which means money gets lent into existence. And so as long as credit is expanding and as long as asset prices are rising, it works. But the problem for other countries is that but if it goes against them, if the currency strengthens against a lot of leverage, that puts pressure on the business, right? So where this becomes a problem for the rest of the world that the US does not have is the rest of the world is always subject to a squeeze in either their domestic currency or the dollar, because it's a zero-sum game when fiat currencies, right? If one rises, the other one falls versus each other. So let's just take Germany as an example, or Europe as an example. They have a lot of US dollar debt, but they also have a lot of euro debt. If if markets start to fall and the economy starts to slow and they start to tap their piggy bank and bring it back home as a result, what does that do? It pushes their currency up. So they're getting deflationary pressure at the same time that their asset prices are falling. That's part of the reason why they have to go tap the piggy bank.
Tap the piggy bank back,
right?
Like a pendulum, so to speak.
Right. Now, the flip side is if the dollar gets really strong and as a result, the euro goes down, well, now Europe has to deal with a strong dollar and dealing with all the dollar debt that they have or the invoices they have that's in dollars. And so they're always, so if the dollar remains within this band, I always say it's like 105 to 85 or 100 to 90 and it bounces, that's not a big deal. But if it goes much above 105 or if it goes much below 90, then the rest of the world starts to feel the pinch in either their domestic currencies or in the US dollar, depending on which way it's going. And the US just doesn't have to deal with that. They have to deal with a strong dollar if it's going up. But if the dollar is going down, that's typically not bad for domestic liquidity in the United States. I guess there are some certain circumstances in which it would be, but for the most part, it's not. And so over short periods of time, anything can happen. But when you kind of zoom out and look over longer periods of time, this is why the dollar always ultimately ends up rising, even though it may fall over short periods of time, because the whole world needs dollars and the whole world is short dollars, and that all of that dollar debt is demand for dollars.
Well, yeah, no, it makes a lot of sense. Now when you see Trump and he has to win, right?
Yeah.
The problem I see here is that maybe based on the fact that the dollar is the global reserve currency, he has to fight against Triffin's dilemma itself, or maybe laws of physics, so to speak, on a monetary mechanics, because you can't have it both ways. So you can have it strong, but at the same time to be liquid enough, right? Or how do you see that tension on keeping the dollar dominant, but at the same time it cannot be too strong and cannot be too weak? So how does that work with the whole tariff?
I think that's the big challenge, right? And this is where Trump is in many ways a conundrum, and he will say one thing and then he'll implement a policy that does the exact opposite. So trying to figure out exactly what he's going to do and how he's going to do it, it's not always easy, right? And I don't think he has a good solution to this, because to your point, he doesn't want the dollar too strong because he thinks that would be bad for exports. But he also doesn't want it too weak either, because if it gets too weak, then it potentially, loses out to other currencies. It causes inflation, yada, yada, yada. So he's got to kind of keep it in this band. But as it relates to, but let me back. That may be the biggest challenge that he has, right? Is how do I keep the U.S. dollar as the global reserve currency, but keep it sufficiently weak to help our our domestic market. But one thing I would say is, while Triffin's dilemma is a challenge for the United States, in my opinion, it is also the United States' greatest weapon, because it's a nightmare for the rest of the world. And what I mean by that is, because the whole world so I should probably say what Triffin's dilemma is. Triffin's dilemma, it basically says when an individual country's currency also serves as the global reserve currency, at some point the needs of the domestic economy will come into conflict with what the global economy needs. And I think we saw that in spades in 2022, right? The dollar went to its strongest level in 30 years. And listen, it caused a lot of problems in the United States, but it caused crisis overseas. And and Triffin's dilemma is in many ways why the rest of the world, or many parts of the rest of the world, wants to get out from underneath this dollar system. They feel like the dollar has too much control over their domestic economies or their regional economies. And they're right, it does. And part of that is by accident, and part of it is by design. And the U.S. can, if they choose to, the U.S. can weaponize the dollar, not just by confiscating the reserves like they did, against Russia, but they can raise interest rates. They can provide domestic liquidity without providing international liquidity. And they can shut down payment rails to certain countries via sanctions. So they can use this Triffin's dilemma to their advantage. And I would say that up until 1972, or when we were still on the gold standard, or 71, I always forget if it's 71 or 72.
The gold standard 71.
Yeah, okay. So up until then, I would probably say that Triffin's dilemma was more of a problem for the United States than it was for the rest of the world, because the rest of the world had a put option. They could put the dollars back to the U.S. and get gold in return, right? And so that advantaged the rest of the world. But when the U.S. removed that link, the rest of the world lost their put option. There's nothing they could put back to the U.S. Sure, they could sell their dollars and then go invest back home, but that didn't have but they weren't taking something away from the United States. They weren't taking treasure away, right? So it didn't really hurt the United States. And then when the United States was able to get Saudi Arabia to basically back the dollar with oil, or only agree to sell oil in dollars, that created a huge amount of demand for the dollar. And so post 1971, when the rest of the world could no longer put the dollar back to the United States and get gold in return, and the rest of the world needed dollars in order to buy energy to run their local economies, that is what allowed Triffin's dilemma to become America's greatest weapon. Now, weapons can backfire, right? So when I use the word weapon, I'm not saying that it can't hurt the United. It can hurt the United States as well. But I would argue at this point, Triffin's dilemma is a much bigger problem for the rest of the world than it is for the United States.
Interesting. Very interesting. Now, there is a question that I would like to ask for a long time, because I got some of your tweets, which are very intriguing to me. And I'll quote just a couple of those.
Okay.
You said once, all the money belongs to the government, and your goal is to hold on to as much as you can for as long as you can. And then there's another one that you said something similar, where if, quote unquote, the government doesn't have any of its money, then how come they get to decide whose picture is stamped on it, right? And you talked a lot about, you wrote articles about how money can actually be more just power based on the fact that we have to deal with governments. And I would like for you to expand on that. But this really goes borderline MMT. I don't know, right?
Yeah,
Exactly.
absolutely.
So I would like maybe for you to expand on that along with the statecraft theme, but do you think that MMT actually describes what is currently happening, even if we don't talk about what they think it should be, right, but the way it's actually working?
So I'll answer your last question first. And yes, I actually think if you were to study the mechanics of how the system works, MMT accurately describes how it works. Now, I think where a lot of the issues with the people who hate MMT or think MMT is a bunch of mumbo jumbo, or who just get triggered by the mere mention of it, they are often, in my opinion, mistaking the description for a prescription. And I think that the people oftentimes who criticize MMT think that MMT thinks you can just spend whatever you want, you can print as much money as you want, and there will never be a negative consequence. And in my opinion, that's not what MMT says, but that's what a lot of people think it says. And what I would say on this topic is, in many ways, MMT is like microeconomics, and Austrian or free market economics is macro. And what I mean by that is that over very long periods of time, I think the market is stronger than men, right? Markets will eventually prevail. But governments are very powerful, and to pretend that they're not is in my opinion, extremely naive. And governments, if you focus on how they actually conduct their business, that is where MMT, in my opinion, can help you understand how they conduct their business. Yes, MMT 50 years down the road may lead to disaster, but it doesn't mean it's going to happen in the next 5 years. And while many people claim to be a very long-term investor, it's been my experience, if anybody's down for 3 or 4 months, they're very upset, right? So the idea that they have 50 years to wait for their investment thesis to play off, in my opinion, is again a little bit of a stretch. And so I also think my criticisms of those on the MMT side and my criticisms on the other side, whether you want to call that hard money advocates or Austrian, is that both sides are a little bit too dogmatic for their own good. In some cases, money has a duality to it. It can be one in some cases, it can be the other in other cases. Maybe it's both, right? But I think for me, what has been key for me to help understand what's going on and what is likely to happen is to understand both sides as equally as possible. Now, I'm not going to sit here and say I'm an expert on Austrian economics and I'm an expert on MMT, but I've tried as much as I could to keep an open mind and understand just from their point of view how it works. And I think that's true. Like, people will say the government doesn't have any of their own money. If they had their own money, they wouldn't have to tax you. Well, it could be that way, but it doesn't have to be that way. In other words, if the government didn't have any of its money and it said, you have to bring us whatever you believe is money or whatever your biggest treasure is and turn that in, that would be kind of a barter system, right? But instead, they've said, we're going to put our picture on a piece of paper. We're going to give it to you. You are going to use that to then go live your life and, buy shoes and buy groceries. And then the grocer is going to take that dollar and he's going to go buy a car so that he can go pick up the goods. But at the end of the year, you guys have to give us a portion of this money back. So it's a way that they provision their needs. The government provisions their needs by spending money into existence. And I would say if the government didn't create the money in the first place, then where did the people get it? Like, it's a logical fallacy to think that the money initially came from the people, because the people didn't have green pieces of paper with presidents' pictures on it until the government gave it to them, right? Now, the flip side is that the Austrian school would say yes, but they didn't start off that way. It started off with gold being money, and over time they did a switcheroo, and people weren't smart enough to understand, and they went along with it and they accepted it. But in the beginning, gold was money. And then, we've now transitioned to this fiat. And the point out, again, maybe that's true, or at least it could be true, but it doesn't change the fact that right now, the government operates in a way that most hard money advocates do not like. And the hard money advocates have not liked it for 50 years now, but yet it persists. And so I guess my point is if I believed in something for 50 years and it never actually happened, I would at least start to question it a little bit, right? Or try to figure out how it is that this other side is able to continuing on. And if they've been able to do it for 50 years, why am I so certain they can't do it for another 5? So I think that's kind of the genesis of these tweets. Is I oftentimes I will ask a question just to get people to think, right? Yeah. Not because I necessarily want to prove that I'm right. I'm not sure if I'm right, but I've spent a lot of time thinking about all this stuff. And sometimes when I talk to people, I feel like they're too dogmatic in their own view. And I think that dogmatism ends up hurting them. And if I could get them to kind of be a little bit more open to different ideas, then maybe that would help them. So,
no, very interesting perspective. No, I appreciate that. Yeah, because my thoughts would be exactly as you said. So if the government is the origin of everything and it gets spent into existence, so taxes would be just a way to control inflation, right? Through MMT, right, and not even fund the government, or bonds wouldn't even be a needed instrument at all, right? Why do you need bonds in the first place except for controlling inflation or something like that, or just provide for repo afterwards, right?
I think what MMT would say is that's the national debt. That is just a place the government has provided a place for people to park the money that's not taxed back. So the excess savings is in the government in the economy is often shown up in the national debt.
The piggy bank, where and one of these countries are going to use them as the piggy bank worldwide, and that's the kind of system that we currently have. So
and here's another analogy that I would use. Is I would say, let's say that you don't like this idea that you spend it into existence and you tax it back. Well, if the government spent $100 into existence, and at the end of the year they taxed $100 back, how could that be inflationary? If there was no money in the economy, how could it be inflationary? So even maybe it's not a good system, and maybe it's not what you would prefer, at least understand how it could work, right? And one of the analogies I've used is a prison. In prison, cigarettes or sardines or some kind of a commodity that gets used for trading, right? They're not passing around dollar bills or gold coins in prison, so you also kind of have to understand the environment you're in. Have some situational awareness. If you're in the wild, wild west and there's no government and it's, winner take all, well, then maybe gold is money in that scenario, right? Maybe bullets are money in that scenario. Probably not little green pieces of paper. But if you're in another environment where the biggest, toughest guys on the block are telling you under threat of violence that little green pieces of paper are money, you're probably going to use your little green pieces of paper as money. Right?
Yeah, it makes so much sense. It gives me the impression, though, that you kind of have to be under your favorite dictator, so to speak, that if they spend in what's good for the country, you're just in luck, and maybe your country is going to be developed. Let's say the UAE, or what's happening, or the transition in Saudi Arabia, for example, or Singapore, where they have this kind of control. Otherwise, you're just in bad luck, because they're going to create some, it's going to have some spillover in bad things, which is going to create inflation, which forces people to invest. And that's why you are forced to invest. Is that a right assessment for the whole thing?
Yeah, I think so. And the other thing I would say is, I say this all the time, is this isn't the system that I would prefer. But I kind of lean libertarian and would prefer that the government didn't exist at all, and winner kind of every man for themselves. But that's just not reality, right? Like, for all of history, there has been a government of some kind, whether it was just the strongest guy in the tribe being the chief and making the rules, or whether it was a governor or a king or a prince or a president or a prime minister. There's always been a government of some kind that has enforced the quote unquote rules. And even when there hasn't been a government, well, then there's been a gang that did it, right? And so while I would very much prefer a very peaceful world, the government didn't exist and everybody volunteered into, mutually beneficial commerce. I have to do my job. I have to operate in the real world, right? And so that's why I think it's important to understand the methods that the government uses in order to run their business. And I think that's where at least understanding the MMT arguments have helped me.
Yeah. And since we do not have a perfect system, or very far from that, and I'm seeing maybe a shift from bonds as that kind of safe haven onto, let's say, I don't know, gold or even Bitcoin as assets who would work as, okay, if I can't do anything about it, let me grab my life raft or whatever that is going to drain a little bit of that liquidity so that I'm not diluted, right? I'm not completely off. Do you see that? Do you see that relationship? I know that you're more of a gold bug and not a dollar bug, but do you see these two assets working more, or do you still see just like gold, or what is your current, or stable coins even, right? It's a lot of stuff that's going on right now.
You've just hit on all of the things that are kind of at the heart of the dollar milkshake theory. So if you were to go back and listen to the very first interview I ever gave on this topic, the genesis of the theory was that interest rates were going to rise and bonds were going to fall, because we were at the end of a 40-year bond bull market. Interest rates were at zero or very low around the world, and that I thought interest rates were going to rise. And as interest rates rose, that would cause all kinds of problems for budgets around the world. Governments would have to respond by stimulus or printing or QE or whatever it is. And as a result, bond prices would fall and investors would look for other places to put their money. And I thought the primary recipients of that money would be U.S. equities and gold. And that's largely what we've seen. And so while I think interest rates will probably rise and bonds will stay out of favor, I don't think that only applies to the United States. So even though interest rates in the U.S. perhaps rise, I think that doesn't just put pressure on the United States. I think it also puts pressure on Europe and Japan and China and everything, because they've got to compete for the capital that is now, the Treasury is paying more for. Also, the milkshake was kind of predicated on a potential sovereign debt crisis. Well, a sovereign debt crisis is when bonds get repudiated, nobody wants to buy them, and they look for other avenues and other things to store their wealth in. And so while I don't think treasuries will necessarily do well, and may in fact and probably fall, I think they will do better than other sovereign treasuries, right? And stable coins are a good example of this. A lot of people have said there is no way the U.S. will be able to sell all these bonds. Nobody wants to buy them anymore. And then voila, this new huge buyer shows up, right? And that creates demand for treasury bonds. Now, that doesn't mean treasury prices are going to rise. It just means there's now another outlet to sell treasury bonds too. And, Austria doesn't have that outlet. Australia doesn't have that outlet. China doesn't have that outlet. Japan doesn't have that outlet. Germany doesn't have that outlet. You look at stable coins around the world, 99% of them are US dollar. So again, it's a relative game, right? It's not an absolute game. It's a relative game. And I think if I look around the world and I see who has certain advantages, there's a lot of people that have certain advantages. If I look around the world and I look at all the problems. Listen, the U.S. has a lot of problems, but I would much rather deal with the U.S. problems, considering I have the U.S. Benefits, than I would prefer to deal with China's problems, knowing I only had China's benefits, or Europe, or Africa, or Australia, or wherever it is. And so when I look at things on a relative basis, and I realize the whole world's in trouble, whose problems do I have to deal with, and whose potential upside can I benefit from as I'm allocating capital? Even though I think that there's problems in the U.S., I can't find another region or another country that I think has a better combination of the two.
Yeah. Yeah.
It doesn't mean it's good. It just means it's better.
Yeah, exactly. Just just a relative game.
Yeah.
And even at the end game, so to speak, of course, we don't want to be at the situation where we need gold to save our lives, because it would be a pretty miserable role, I guess,
Yep.
right? And I don't want to misquote you, but how do you see you actually using it? And also on the matter, do you see maybe Bitcoin becoming kind of a different sort of beast in the longer term? I know that you're not too much of a fan, or not, you don't hate or love it too much, but do you see those two playing a similar role for after the collapse, or maybe helping you during it? I don't know.
Well, I think Bitcoin, and I'll just talk about Bitcoin because I follow Bitcoin. I don't really follow the whole other ecosystem, right? But I don't think Bitcoin's going away. I've said that for several years. I don't think it's going away, but I also don't think it's going to become the currency of the realm. And it's when people are the Bitcoin maxis and tell me that it is going to become the global reserve currency and there's absolutely nothing that can be done to stop that, that's where I have the issue. But I think Bitcoin is probably the purest play on global liquidity. So if we get into some kind of a crisis or some kind of a slowdown and governments have to go back to QE or stimulus or printing money, however you want to describe that, I think Bitcoin probably does pretty well in that scenario, right? Mm-hmm. I remember saying one time, Bitcoin is a very asymmetric play. It wouldn't shock me to see it go to $1 million, but I don't think it's going to become, I don't think the US is going to adopt it as money, and I don't think it's going to become the global reserve currency. Mm-hmm. And I had all of these people come at me like, you just don't know what you're talking about. Why are you a hater? Da, da, da. I was like, I literally just said it could go to $1 million. I understand the upside. I get it, but it's not guaranteed, and there's risks involved. And you should, and just because something goes up in price doesn't mean it's money, right? And so, but I think as we move forward in time, and as countries come under pressure and their sovereign bonds start to fall in price and the yield goes up, and they, and people look elsewhere to put their savings, I think, equities, U.S. equities, I think gold, Bitcoin to a certain extent can be a beneficiary there. I'm sure some other hard assets probably will be as well. But none of this stuff is guaranteed. I guess that's my point. And, even though I have conviction on the dollar, I don't know for sure that I'm going to be right. Maybe I'll be wrong. But I own a lot of assets. And if the dollar goes down a lot and I'm wrong, I'll probably make a lot of money because the assets should go up a lot. Yeah. So I think that's the way I think about things. I think about things in probabilities rather than certainties. And listen, it's a crazy world, and it's probably not going to be easy, but it's going to be interesting, right? So it's fun to kind of try to figure it out.
For sure. And gold at the end, it's literally just the same thing, basically, right? Or do you think we're gonna see any kind of change back to a gold standard of some sort, or just? I think what comes after fiat is another fiat. Now, what if it goes to gold? That's fine. I just think it's unlikely, right? I would probably, if somebody said, if Brent, you can vote for a gold standard or a debt-based fiat system, I'd probably vote for a gold standard, but I don't get to make that decision, right? Yeah.
So in other words, I think the reason I think gold is so important is because I think it has proven itself time and time again. There's 5,000 years of history that tells me gold will endure and gold will be worth something, and probably worth a lot more in the future. Now as a result, I own it as insurance. I don't own it to get rich. I don't own it because I think it's the only thing you should own. I don't think it's magic. I don't think it's holy. I don't think it's a religious object. I just think it's, if there was a true free market, I think that gold would become money. But I'm under no illusion that we have a free market. And I don't think we ever will have a free market, or if we do, it'll only last for a very short period of time. But that doesn't mean the price of gold won't go up a lot, right? And so I don't own it because I think it's going to become money. I own it because I think it's a good store value.
For sure. No, that's absolutely fantastic. I know that your time is pretty valuable, but just one thing that I may have seen as as Besant, seen as a contender to be the next Fed chair. And I remember you telling how you think that eventually the Treasury is going to merge with the Fed or something like that. Could you just get a few quick notes on that before we wrap up to see like what your vision would be?
Yeah. I mean, essentially, first of all, I think the idea that central banks are independent is the biggest myth that they teach in business schools. I don't think central banks are independent. And while they may be given, a band of independence in which to act, if things ever get serious enough, Congress just changes the law, and now all of a sudden they're a full government entity, and whoever puts somebody in their place to do their bidding. And as we move forward in time, and I think governments come under pressure, and I think we're moving towards a period of more government centralization rather than less government centralization. The Fed will be seen as a tool that the government can use to its advantage rather than one that it's beholden to. And I think there will eventually be enough economic challenges that it will come up for a quote unquote vote, and somehow these two will be merged. And it will be, when it happens, when I say them, I think the Treasury and the Fed would be merged. And when that happens, it will be hailed as a great development. And this is for the good of the country. And I don't know why we didn't do this sooner. It makes so much sense, right? And I think that will be a very negative step on the road to where we end up going. But I think that's probably what ends up happening.
Oh, yeah.
And if you look around the world, a lot of countries, that is, the president or the prime minister has a lot of influence over the central bank, right? And people say, well, then that's a banana republic. Well, okay. Yeah, that's probably where we're headed, right?
At least we're going to have to enjoy the ride, regardless of how long it takes. Brent, I really appreciate that. Just for us to wrap up, how can people find you? I know that you have your huge Substack success, and I follow that closely. Where can people find you?
Yeah, so Substack is probably the best place to follow our work. If you go to santiagocapital.substack.com, there's 2 different tiers to sign up, but would love to have you there. I'm pretty active on Twitter. Santiago AU Fund is the handle, or you can just look up Santiago Capital. And then every week we do a podcast on YouTube. It's called Milkshakes, Markets, and Madness, where I just kind of talk about something I see going on that's kind of interesting to me. And if you go to santiagocapital.com, it'll kind of direct you to all these different things. So number of different ways to interact with us.
Awesome. Brent, thank you so much for your time. I really appreciate it. It was fantastic insights. See you the next time.
Yeah, thanks for having me.
Thank you.